Okay, let's take stock of the global handover as we head into a brand new week of trade. There are multiple forces influencing our market. Now, for this morning, we're going to be paying attention to the US handover, and the US stocks were more or less flat but showing a slight uptick last night in Sunday overnight trade. As the futures I'm talking about, the market is looking to extend its record-breaking rally. Let's remember the S&P has now been featuring a lot as it makes new lifetime highs. Futures in the Dow rose around 50 points. S&P and Nasdaq futures gained around 0.1% each. Apple last week jumped more than 8%, being the largest contributor to the US market rally, and Apple's 2020 gains now stand at a staggering 70%. So that's how the US markets are shaping up. Let's now head down to Asia. Asia seems to be quite upbeat this morning as well on the back of a decent US handover. The Nikkei, Kospi, Seng, mainland Chinese stocks. So wherever you really look at, we're seeing positive reactions so far. Even the Australian ASX 200 is not open too weak at all. And all these stocks should be trading firmly in the green today. Going over to Europe, the last update we have from there is on Friday, where stocks actually closed lower as investors focused on disappointing economic data as well as geopolitical tensions. The PMI and other key indicators did not give such a good result for the latest data. That's what sent your European stock 600, which is pan-Europe, down around 0.15%, with all your major sectors and major bourses dipping into the negative territory. So that's how the equity markets are shaping up. If you want to look at the way India performed on Friday, there might have been a bit of skepticism regarding the US futures being in the red at that time. However, that seemed to have reversed. Friday had a really strong close for the US markets. So given that the futures are up today, post a strong close on Friday for the US, I would anticipate the SGX to be showing a fairly decent uptick this morning, and we shouldn't really have too much of a headwind in trade today. That's because we've really been mimicking the US handover. Now quickly, just two commodity checks for you, oil and gold, like we always do. On Friday, oil actually slipped. This is on the back of reimposed lockdowns worldwide, which is hitting demand recovery. This is also despite major global oil producers curtailing production. Demand seems to be a bit worrying. So Brent Futures were down 84 cents or nearly 2% to $44 a barrel, and WTI futures were down 48 cents or 1.12% at nearly $42 per barrel. Finally, gold is well on Friday, dropped to its lowest in a week. This was en route to its second straight weekly decline on Friday. There has been a strong rebound in the dollar and a resurgence in business activity, which in turn is hitting a bullion's safe haven appeal. Spot gold fell 0.2% to $19.40 per ounce after declining over 1% to $19.10 per ounce on Friday. And then US gold futures were unchanged at $19.47 per ounce.